Hello, welcome back to Learning from a Layman. Carl Christensen, joined again by Cameron Christensen, and against our better judgment, Tim Cox.
Against Our Better Judgment is the name of my biography.
It's the name of your wife's biography as well.
Probably so.
I would say jalapeno poppers I ate for dinner might be against my better judgment.
Jalapeno poppers, those are good.
Yeah, I use habaneros instead of jalapenos.
Oh, okay.
That's healthy.
Okay, so today we are going to be discussing buying a home. And this is in all phases of buying a home, from looking for a home to buy to all the considerations of getting a mortgage and closing on the home, and then also whether or not if you are looking into buying a second home or a vacation home and or a rental or investment property. So we'll talk about all the different things that are involved, and so we're going to start obviously with the thing that most of us either are familiar with or will potentially be familiar with in the future, which is buying a first home. Most of us, and that's 90% of us, stop there. So that seems to be a good place to start. All right, so we've got on the podcast, so I have purchased in my life now 2 homes. We currently own our home. We owned a home before when I was going to graduate school. And Tim has been in a home for, I think, approximately, 120 years now, Tim?
Well, it depends on if a dog's measuring or a human.
What is it now, 14 years? I mean, it's been a while.
10 years. Well, coming up on 11.
Okay,
Yeah.
there we go. I was close. And Cameron, well, he's been by far the most familiar with different locations, has as of yet not purchased a home, lived in lots of different locations, but no home purchase as far as I'm aware of, right, Cameron?
No home purchases, but I do feel that I've had a very transient life from different houses.
Yes, bopped around
And
quite a bit.
More times than I want to admit.
Yeah, so I guess that's when we talk about buying a home, you are already one of the considerations is you will be moving if you're buying a first home, and that is a major stressful event. And yeah, so but we're going to leave that out of the discussion because we'll assume that's built into, even if you're renting, that's going to be something you eventually have to do. So let's talk about specifically buying a home. So Tim, tell us how you picked your home that you live in right now.
So for me, I got in contact with a family friend who is a realtor, and she'd already helped a number of family members of mine to get into to buy a home. So she, someone I trusted, and knew she would. Anyways, I guess you don't have to know someone personally, but anyways, found a good realtor. So that's step one, and she helped me to do a lot of browsing. So I mean, you can always browse on like Zillow and stuff, or I'm sure there are other websites. But she, with her kind of realtors, they have more access to information and that kind of thing. So she would send me, I kind of gave her my parameters. I said, okay, I'm looking for something around this price range, and with these specs, this square footage from here to here, this range, this many bedrooms more or less, and had kind of a nice broad range. And then just kind of, I would look at the listings online, and go through them. And then I would kind of narrow it down to ones that I was really interested in. And then I would get together with her and we would go check them out. And actually went through quite a few, which I kind of recommend. The more you go through, I think the more you get a feel for what you want, for what you're comfortable with. Until eventually I found one that just seemed really awesome and at a good price. And so I made an offer and the offer came through. So then I went through all the hodgepodge and muddle of actually making the purchase. So anyways, is that what you're looking for?
Yeah, so you stepped in a bunch of things here that we're going to spend a little bit of time on here. But yeah, that's kind of the process. There are obviously various other versions of that I'll share a couple of my experiences. But yeah, that's kind of the normal pattern for finding a home, right? But let's hit some specific things that you talked about there. So first, and this is like the order of, I think, how we think about buying a home, and first and foremost, I think most of us, it's price, right? You can't. Tim might be a high roller, but most of us have to consider, how much can we afford? And so the price is the first thing that you're going to look at when you're looking at buying a home. And so you're going to need to look at what you can qualify for as far as a mortgage goes.
Isn't the rule of thumb, correct me if I'm wrong here, is it like, 5 times your annual salary or something? Is that kind of the max? Or
I've heard that, yes.
Okay.
Generally, unless you're
I
moving
cannot
out
get a
of,
house here in Utah.
what was that, Cameron?
So there's no way I'll be able to get a house here in Utah 5 times my.
Yeah, it's Utah real estate there, and
I'm not even up to $100,000 then.
right. Well, the Utah real estate market has gone insane recently. I think a bunch of different real estate markets have gone pretty crazy. But once again, talking about the mortgage, there's a lot of things to consider, even with a mortgage, beyond just what can I qualify for. So unless you're moving out of your parents' home for the first time and buying a home, which I can't imagine I don't recommend it. I can't imagine anyone ever normally does that. Normally what you do is you move out of and you start renting a place. And so trying to find a home if you're making a specific rent payment and you can make that rent payment, looking for a mortgage that will have a similar payment to what you're currently making for your rental might be a good place to start. Now, if you're getting a new job and moving to a new state, and then obviously that math changes a little bit, right? You're getting a new job, potentially a pay increase. So then it's what I would do is, once again, just look at what your current finances are. Think, okay, I'm getting an extra $5,000 a year. What is that every month, and how much of that is actually going to be able to go directly to my mortgage payment? So, and then once again, don't figure out how much can you qualify for, because banks are generally going to give you if you have good credit, it's essentially it's going to be significantly more than you can actually afford is what you can qualify for. At least is more than you should afford.
The credit, that's the key.
Credit certainly matters.
But that it's kind of funny. I'll share a personal experience. My experience was kind of the reverse. I was a good prospect, but I was shopping for a home during, right after the financial crisis. And so everything had like tightened up. And so I went to my credit union and they were really picky with me. I finally, went to a different bank and was able to, but it, there's seems to have been a yo-yo effect where like all the banks were hurting from all their subprime loans and stuff. And so they tightened it up. It seems to me like now the market is back a lot looser again. And
yeah, for sure. And then once again, that if you're a first-time home buyer, I'd imagine that you're going to need to look around a little bit. That's actually true across the board. If you're getting a mortgage, shop it around. There's no need to go with the one bank that you've always banked with. That's fine. Get a quote from them, but get a quote from another or two. Make them compete for you. What that's going to do is have a downward pressure on the interest rate and or closing costs or something along those lines. You'll be able to get them to compete for your business. So don't just go with one mortgage quote. Go with 2, go with 3, and that'll take you a little extra time. But when you're talking about a 30-year mortgage, it's worth your time.
Totally worth it.
Yeah. So so once again, the few of the things that have some wiggle room when getting a mortgage are your interest rate. And right now, this is the year 2021 in January, and we're looking at very, very historically low interest rates, right? I think they're still somewhere between like 2 3/4, somewhere around 2 3/4%. And so that's historically low. So it's a really good time to buy as far as the mortgage interest rate is concerned. We'll get back to talking about price of home in just a second, but
my parents tell me my parents tell me the story about when they bought their first home in the 80s, and they were excited to get 9% as their interest rate. They thought that was a great deal.
Right. Yep. And that's that's the baby boomer generation is used to like 9-10% rates. What was that, Cameron?
I saw 2.1 on a billboard that
Wow.
Yeah.
That's the lowest I saw it.
Yeah, I've seen low rates like that. I've seen 2.5. Yeah, even lower than that. But you have to be a little careful with those ones. Sometimes they're kind of not as clear cut, and either they have higher closing costs or points or things like that. So, and I'm not
use your kneecaps and thumbs as collateral.
Anyway, just mortgages.
So yeah, you don't want an adjustable rate mortgage. You want a fixed rate mortgage. You certainly do not want an adjustable rate mortgage. I don't even know why that's still a thing. That shouldn't be a thing. Don't do that thing.
Should we explain adjustable rate mortgage?
Yeah, you want to, Tim, or do you not know what they are?
Yeah, well, if you strong arm me into it, mortgage funds are never okay. Okay, no, adjustable rate mortgage just means normally a normal loan has a fixed interest rate. So they say over the course of the next 30 years or 15 years, however long it's determined, you're going to pay this interest rate, 3%, 4%, whatever. Adjustable rate mortgages basically say, we'll give you this really nice low interest rate for the next 5 years or whatever term, and then it will adjust depending on what the interest rate is. So what you saw happen, they kind of got famous in the housing crash in 2008 and 9 or whatever. People would get these adjustable rate mortgages on homes that were, too expensive for them. And, but the interest rate was low enough that they could manage it. But then after a year or two or whatever, the rates started to go up. The rates adjusted and the interest rates start to creep up, and all of a sudden they're getting priced out of the house. And so it's kind of in my mind, a predatory, finance instrument,
right?
And certainly caused a lot of damage in the last housing crisis.
Yep,
it's like the reverse mortgages that were happening 2 years ago.
Yeah, reverse mortgages also a thing. Yep. And if you're not familiar with a reverse mortgage, that idea is it's generally, at least my familiarity with them is if you're elderly and it's the idea of essentially using your home as collateral and then the bank pays you until you die, and then they own your home when you're dead. Is that the idea, right?
Yeah, that's pretty much the idea. So you figure guy turns 55 or 65, 67, they're only going to have about 15 years left on their life. So they do a reverse mortgage, they buy the house back, and then they sell it for a ridiculous amount more money.
Right.
So,
yep. So I don't know too much about those, but yeah, generally,
for some reason banks don't have to pay the same things that everyone else has to do. So
right.
Really, what it comes down to is if you have a lot of money, buy a bank or become a bank. Something like that.
That'll be our next podcast.
How to buy a bank. Okay, good. Well, real quick for those of us that can't buy a bank. So once again, mortgage interest rates matter. They matter a lot. You want a fixed rate and you want a low rate. And right now, like I said, you should be able to negotiate, hopefully down to, if 2 3/4 worst case scenario, probably if you have good credit. Now, if you do not, maybe you put off buying a home another year and get that credit score back up. Do what you got to do to get that back up to qualify for the lower rates, because that matters, right? That's the percentage interest you're paying. So you're essentially, if you're getting the higher interest rate, you're just opting in to pay more for the house, and by more I mean tens of thousands more over the life of the loan. So it's worth, if you can take another year, get that credit rate rating up, credit score up, then you can get a better interest rate, assuming they don't skyrocket in the next year.
We should do a podcast on credit scores.
Skyrocket next year too.
Yeah, we should do. What were you saying, Cameron?
I'm thinking that they're going to jump.
Yeah, they might.
I think we're going to have a nice little bubble that pops here within within the
It's
year.
certainly possible. It's certainly possible. I couldn't. It's hard to foresee the future, but it is. I could certainly see that happening.
On that note, Cameron, I recall thinking the very thing that you were commenting earlier. How am I ever going to afford a house? When I was starting to look at property and stuff in 2000. I graduated from college in 2007, and went into the workforce and saying, okay, I'll start saving up to buy a house, and 2007 and 8 things were skyrocketing, and yeah, there was just no way. But yeah, you just wait and be patient, and eventually things settle down.
Yep.
Well,
Now
starter homes here in Utah, where I live in Utah, are starting at $300,000.
Yeah, I do believe that there is some bubbly prices either in the stock market and in the housing market, in some housing markets at least right now. And so you can wait for that to come down a little bit. Here's the thing, though: over time, generally prices go up, right? So if you're feeling it's a bubble, and I do believe, like if you've seen 100% increase in real estate prices in the last 5 years, which is essentially where you're at right now in Utah, you can imagine that's kind of bubbly. That's not like a good, growth market. That's a what the heck just happened here type of market. So, yeah, so that's something. But anyway, we're getting slightly off the okay. Well,
Okay.
I mean, it's tangentially related, but okay. Interest rates. The other thing to consider here is if you're buying a home and you have less than 10% down, you're going to be looking at mortgage insurance. Okay. Is it 10%? It's 10%, right? Can anyone confirm?
10%. Yeah, I'm pretty sure it's 10.
I don't recall.
Okay. Well,
Well,
let's say it's 10%. We try to be
The guy that
factually
has
accurate
bought the
here.
house, I think it's 10%.
I feel like it's 10%, but it's some percentage. If it's not 10, it's 15. Anyway, somewhere in there. If you don't have that percent down, you're looking at mortgage insurance, and essentially that's the banks once again eking more money out of you to cover their own risk on you. So with an FHA loan, so that's a Federal Housing Authority loan, you can put as little as 3.5% down on a home and get a mortgage to buy that home. Now, so then you have to looking at.
Timehauser, it's federal?
I thought it was federal. Yeah.
That was first.
Well, that's also a thing, but the FHA, I believe, is the Federal Housing Association or Administration. I don't know. So
I need to
3.5.
start playing the lottery so I can get that 10% down. Is that what
Yeah.
we're saying?
So generally, when I bought my first house, I did not have 10% down. We had 3.5% by the skin of our teeth down, and so that was fine. But then you have mortgage insurance. Now, mortgage insurance is some percentage of the loan, I believe, and mortgage insurance can go away over when you have a certain percent of the house paid off, depending on the terms of the loan and whether or not you need to refinance is a question. So, for example, what I did when I bought this house that I'm currently in, I wasn't quite at 10% of the price of this home that I bought that I currently live in California when I purchased, and so we're looking at getting mortgage insurance. But I think I was pretty close. And when I was getting some quotes for mortgages. I had the option of, at the time, we were looking at about a 3.5% interest rate. This is about four years ago, and so I was saying, okay, like that's. What can I do to get rid of that mortgage insurance? And they said, well, either you can pay and it'll probably be off in here in 5 or 7 years, or we can bump up your interest rate by 0.125. So instead of 3.5, it was going to be 3.625, and we'll get rid of the mortgage insurance and just have a higher interest rate. Now, what that meant is, right away, I had lower payments, but then mortgage insurance will go away. The higher interest rate will not over the life of the loan, right? And so it's got a bit of a gamble. So I took the higher interest rate, did not have mortgage insurance, with the assumption that I'd either sell the home within 30 years, and if I sold it within 15 years, I was going to make that would be a good return on my investment, or I could refinance, which is what I ended up doing this last year when the interest rates were dropping. So anyway, mortgage insurance, something to consider, and there are different things different games you can play essentially with the mortgage lenders in order to get that either down or removed or whatever. So look into it when you're getting a mortgage. All right, so that's enough about mortgages for now, because it's while it's a very important part of buying a home, it's also lame. It's far more fun looking at the home and deciding on what home you want to buy. So that's the price part of it. If you look on Zillow, there is a Zestimate for homes. I assume if you found this podcast, you're probably pretty savvy as far as looking on the internet and things like that. The Zestimate is essentially, once again, this is something you can look up and maybe you already have. It's a computer model of trying to figure out what Zillow has this algorithm that it uses in order to figure out what they believe the home is worth, and they've gotten it significantly fine-tuned over the last couple of years, and it's pretty good. And so people generally, if you're going to show a home or if you're going to buy a home, when I've done both, people mention that number. They're like, "Oh, Zillow has it at this. Why is it higher?" Or what do you? So it's something to be aware of, and then try to figure out how that's influenced. And then another thing to consider when you're looking at prices of homes is property tax. Now, Tim, Arizona property tax, are they reasonable?
Next to yours, they are.
Actually, California is not horrendous. Now, those of our listeners in Illinois will know what horrendous really means. You're talking like 2.5% property tax. So,
I
would suspect Matt has a fairly high property tax.
DC. Yeah, that's possible.
East Coast, yeah, you would expect. But it's still, for a typical home, property tax is going to be thousands of dollars.
Yep.
Here in Arizona, I've got a home that values at around $300,000, and I'm paying, I think, $2,000, somewhere in the neighborhood of $2,500 a year.
Okay.
So that is part of the price of owning a home. You pay taxes on its value.
Yeah,
and part of the reason why I hate that my property value is going up, because unless you're planning on selling, it just means more money out of your pocket.
Okay, so that varies by state. How property taxes generally in all states go up over time, but for example, in California, your property tax, the value of your home, as determined by the state, does not go up actually with the market. It kind of just sits there. So you buy a home at a particular price that sets the property value, and it will not significantly change until you either sell that home or something other major happens. And so that's, for example, in San Diego, and I'm familiar with the real estate market down there as well, people that have owned their home for now, let's say 40 years, and got into the San Diego real estate market back when homes in San Diego were like 150,000, as opposed to now 1.5 million. So if I have a coworker that his parents are in that situation, if they just write into their will or whatever, if they just write the property over to him directly, no change in property taxes, no reevaluation of property value, and so he inherits that lower property tax rate. So there are different games you can play with that as well, and it's important when you're looking at buying a home online. The property taxes on Zillow are often not exactly right, and they could be significantly higher than what it says there or significantly lower. They kind of go on a best guess for the area as opposed to actually looking it up in a county record. They are available in county records. Every county keeps it, and I believe every county in the United States at least is online these days, so you can literally just look up a property as far as what their property tax is. So that's something worth doing if you're looking at, especially if you're moving to a new state and you have no idea. Like I said, Illinois I know is astronomical. Like if you have a $300,000 home in Illinois, for example, we used to live in Rockford. I believe if you live in a $300,000 home and you're paying something like $10,000 a year in property tax.
Ouch.
Yeah, it's insane. It's truly crazy. And it's not like Illinois is otherwise a low tax state. They're not. I don't know how they're mismanaging that, but that is what it is. So California is not cheap, but it's not insane like Illinois might be, or maybe some other eastern states that I'm not familiar with. So, okay. that's taxes, property tax. We could talk about a couple other things, but let's move on. A couple other things you talked about is size, bedroom, square feet, garage. So a bunch of things, and these are things that, once again, obviously everyone knows, and they're buying a home, and this is the calculus where you have to determine what's right for you and your spouse or your family, and figure out, what size do we need. So garage, I highly recommend. What?
Tax is only 1%.
Oh wow, there you go. I highly recommend a garage. Even in Southern California, you need a garage, not for storage, if nothing else. And we don't keep our garage stuffed with things. In Southern California, we don't have to worry about the weather as much to protect our cars, but we do have to, like, store bikes, for example, boxes, Christmas boxes, stuff like that. And while I like to think we're pretty organized as far as that goes. If you do not have a garage, then you have to buy like a shed and put it in the back or something. You just not enough storage room if you're going to live in that home for another 20 years or 30 years or whatever, and you don't have a garage, you just start running out of space. Tim, I've seen your garage. You need your garage, right?
Yeah. Bethany's saying for our ping pong table, which is true. We have a ping pong table in there.
True. Yeah. I was just saying, if you live in a home for a long time and you don't have a garage, which I haven't had this exact experience. So we rented a home in San Diego for a while that it did have a garage, but it was literally exactly the size of our 2 cars. And so, I mean, like, we barely could close the garage door, and we had to, because the parking, if we didn't park them in the garage, there wasn't, like, then it was like catch as catch can around the neighborhood, and that was insane.
Yeah.
So we had to get our cars in the garage, which was fine. We could. The problem was then the amount of space that we had for storage was approximately 2 feet.
Mm-hmm.
And because we were renting, we couldn't just go ahead and put up a bunch of shelving and stuff like that. And so, yeah, it was, when we buy a home, make sure there's a garage.
And yeah, Carl, just to add, you think about all the random things you need to store, some of which don't store well in your carpeted house. Like you mentioned bikes, we have strollers, sports equipment.
Right.
My wife does like preschool stuff, so she stores like a lot of her materials and whatnot. So I mean, there's always something.
Right.
So,
honestly, yeah, I'd compromise more on square footage than I would on storage, like on a garage, because, like I said, I lived, when we first moved to San Diego, in a 3-story townhome that had, I don't remember what the square footage was, like 1,200 square feet or something like that, and it was a family. At the time we were a family of 4, and that was fine, actually. That was not a problem, but it was fine because we had a garage that was bigger. And so we had more storage space in the garage. When we moved to this other home that actually had a bigger square footage, but the garage was tiny, all of a sudden we started running into these storage issues. So something to consider. Let's move on to home, location. So location obviously is very important when buying a home. Cameron, I'll say you rent right now, but you live a little ways away from your job, right?
I do live a bit away
from
my job. I'm just, yeah.
Oh, go ahead.
No, I was going to say, do you miss the property rate that you were paying? The property tax?
What, do I miss it
when you were
Utah?
living here in Utah?
I honestly don't even remember what it was. I'm sure I miss it. I miss a mortgage payment that I made in Utah.
Orem City
as well.
property tax is 0.0092250.
Yeah, honestly, I don't even remember.
Less than 1%.
Yeah, it was. It was not a big part, I can tell you that. But it is not insignificant here in California. But it's nothing to. I honestly don't think about it that much here. It's just not. It's not as bad as some other places. So, okay. So Cameron, you live about half an hour away from your.
That's really small. But yeah, no, I live about half hour, and well, when I originally moved here, I was actually more like 45 minutes from the place I worked, and then I moved to a different place, or yeah, I moved jobs to slightly closer place. So
Right. Yeah. So and you're about, and I did that essentially. What the commute that you have for your work is about what I did for 4 years in San Diego. It is about the edge of what I'm comfortable doing, and obviously different people have different comfort levels as far as a commute goes. But when buying a home, you certainly have to take that into consideration, right? Obviously, when you rent, it's also consideration, but it's generally more short term when you rent, and so you think, okay, I could do this for a couple of years, as opposed to I could do this for 20 years, which is, or 30, or however long you might own that home. So proximity to your job matters greatly. It also matters, how close you are to family or friends, whether or not you want to live a long ways away from those people or have them close. Also, things to think about. The other things to consider, and things that I didn't consider as much when I was buying a home either time, actually, noise. So I love our home that we live in, with one exception. We back on a busy road. It's not crazy busy. It's not a freeway. It's not even like a major high, but it's a busy enough road that like we get some noise. And for all the rest of my house that I love, that bothers me, right? So that is something to consider, and something I hadn't thought about too much. It is often priced into homes that if that's okay with you, and it honestly is okay with me, and this is, then it's usually like some percentage, like a 0.5% lower than it would be, that the home price would be if it were not, close to something that's noisy. So if you're okay with that and you just want a nice home, then that can be a way to find a discount as well. You're like, okay, this is noisy. Then there's proximity to shopping, and then a big one obviously is resaleability. So if you're looking around for a home and you're thinking, okay, like I could live here. I like some of this. It's a little quirky. It's a little old. This is weird, but I like it. I could buy this. Well, then you have to wonder to yourself, okay, like, am I just that kind of quirky? And if I buy this and then I need to move out here in a couple of years, am I going to have to try to sell this for 2 years before somebody my kind of quirky comes along to buy this? You know what I mean? Thoughts about that,
I
Cameron?
get what you're saying. I think that same thing if you're doing this and building your house. Like if you build it, you're selling it, right?
You broke up a little bit there, but yes.
I
Yes.
said if you build a house, if you build it too unique, you might have
Right.
a hard time reselling it.
That is true. Tim, you had thoughts?
Yeah, you just have to kind of, it's almost like you're doing a math equation and you're asking yourself, what you're willing to spend and what you're willing to give up. I think you'll find with every time you buy a home that you're giving something up. You're always going to be saying, I like it except for this. And just, have a care for what the except fors are. And oh, sorry.
No, I was just going to say, this is, if you want to learn more about multivariate calculus, go back to our podcast about that.
There you go. That's right. And one other tip about those considerations. A lot of times it's helpful to ruminate and give it some time. One important thing. That's right. If you have a 4-chambered stomach, then but no, one important thing when you're shopping for a house is to not rush the process and not rush yourself. If you're buying something on a menu at a restaurant, you can do an impulse buy, and worst case scenario, you have one uncomfortable meal. With buying a house, this is a huge life decision. A level below, but getting up there towards things like marriage and that kind of thing, and in which it has an impact on the rest of your life. And so give it time, always sleep on it. And sometimes if you're in a situation where there's a salesperson, at the model home unit or whatever, or an eager realtor, or perhaps an eager spouse who is kind of pushing things along and you're not comfortable with it, you have to be able to just step back and say, no, I need some time. I actually have a little bit of experience with this. I was when I was shopping for a house, I found a nice house that looked really good and checked a lot of my boxes. And so I actually started the paperwork on it, and hadn't signed everything, but I had started the process. And it was kind of one of those where it's like, if you want to cancel it, you can within 24 hours, kind of thing, something like that. And I slept on it, and I felt terrible about it. It was I was very uncomfortable about the whole thing and did not feel good about it. And so the next day I pulled out, I canceled everything, and ended up not buying that house. So anyways, give yourself the space to make that decision if you need to. That's one of my biggest recommendations. Never rush. If someone's rushing you, then that's a big red flag. And
they're Russian?
Da, comrade.
Yes.
Like in Yakutsk.
Okay. It's a good thing we don't have any Russians.
So Tim, you didn't want 10 years of bad meals. Is that what you're saying?
Yeah, that's right. What are you talking about? I love borscht.
Tim, this is of course, and again, not rushing is also Tim's like life motto. So,
That's
And be frugal.
right.
And being frugal. Yes, indeed.
But yes, for sure, you don't want to jump into a home without being sure about it. Like I said, there's always going to be something where you're like, okay, we can live with that. But once again, if you can live with it, make sure that someone else can live with it, whether or not be your spouse or whomever. But also whether or not, what can I resell this in the future? Am I opting myself into something that nobody else would ever want to buy from me?
And never fool yourself into thinking, oh, this is a once in a lifetime opportunity. If we can't miss this. If someone buys it out from under you while you're considering, you know what, there's going to be other houses out there.
Right. Yeah. One scenario. Let me give you one example of what actually turned into quite a good investment. That was my brother-in-law bought a home there in Orem, Utah, back when the housing market was at a pretty low point, and he got into a home that was essentially just garbage. It had been an illegal puppy mill, where they'd stored, probably 30 or 40 dogs, and it smelled like it, and it looked like it, and it was just a nightmarish, crazy. He had to get a building loan to get to. Like, you wouldn't qualify for like a normal mortgage. Now, they do have different types of ways to get into these types of things, but it takes more work. And my brother-in-law was willing to do that, and he got it for a pretty good price. I don't remember exactly what the number was, but because it was just a piece of garbage, like nobody wanted that hole. It smelled like dog vomit and all kinds of it was horrendous. And my brother-in-laws, so the one that purchased it, and his brothers, and my father-in-law, and I went over and helped every once in a while. For the next 2 years, we're just fixing it up on the weekends, whenever they had time. And it went from just this disgusting heck hole to what is now a very nice, livable. You can't smell a whiff of dog. You would have no idea that had ever been the scenario. And the home price is now easily doubled from what they bought it at. Now, that was 10 years ago, but that is a scenario where he's gotten himself quite a good investment. Now he had to put some sweat equity into it, though. So. But that's, if you have the time and the gumption to do that, then maybe that's your, you can flip homes. Then you don't need our advice here. So, but okay. Well, a couple other things to consider when buying a home. The age of the home. As homes age, it is true that real estate over time will increase in value. It's generally an appreciating asset. However, the parts of the home depreciate in value, right? Your air conditioning unit has a lifespan. So 15 years or whatever it is, 20 years after you've got an AC unit put in, it will kick the bucket, and you will have to be installing a new one, which can be thousands of dollars. So things to consider if you buy a home that's 15 years old and they say, oh yeah, the AC unit's original. Like, okay, well then you can kind of plan in the next 5 years, we probably have to put a new AC unit in. Hot water heater. That's once again a consideration. Like, okay, how old is this? Because when those things spring a leak, you got a problem. The wiring in the home, the roof, the flooring, everything in the home except what was that?
Oh, sorry, sinks.
Yeah, right.
Mhm.
So
Yeah.
each and all homeowners that might be listening to this podcast are now laughing to themselves because they know that's just things just break, and it's like, it's this and that and this and that. So the price of a home is not just the mortgage price, it's also the ongoing maintenance costs of maintaining that home. So it is something also to consider when you're getting a home, is what's coming up here very quickly that I'm going to need to have the funds for in order to be able to live in this home. So, and then obviously just the amenities. So when we moved in this area in Southern California, my wife said we need to have a pool. And pools they're pretty common here in the area that I live in, but they obviously cost quite a bit. They add to the home value quite a bit, but they're actually even more expensive to install. So I had to know going in that it's significantly easier to buy a home that already had a pool than go into a home that didn't and then buy a pool. Because not only does it cost a lot to put in a pool, it's also the case that then obviously you're not going to roll that into your mortgage, or at least not quite as easily. So just the things to consider once again is how does that affect the price and the decisions that you make as far as what you're purchasing. So okay, we could talk about closing costs, things to consider: escrow, title, insurance, all things. You should shop your insurance around. I don't think it's usually worth your time to shop your title and escrow around. Those are other just parts of the closing or buying a home. You can. Most places will tell you that you can, and maybe you could save $100, but it's probably not worth the time and headache it would be for you to do it. Now, insurance is a recurring cost though, right? So your home insurance is something you should shop. Consider what your risk, why do you have home insurance? Like, for example, I have home insurance in case my house burns down, not so I can make a claim if my kid accidentally puts a hole in the carpet, right? That's not something I'm going to put a home insurance claim in on. And so my deductible for my home insurance is quite high, because all I want it for really is fire insurance, or some major, like a tornado hitting my home, which would be wild in Southern California. But and earthquakes are not
giant
covered.
rat that eats through your water line.
Well, that did happen, but we caught that
Very
second.
likely.
That did happen. Didn't you know that, right, Tim? A rat did eat my water line. So,
Oh, I didn't know about the water line. I knew about the rats, but
yeah,
sounds like they have a number of escapades.
yeah, until we crushed their little. Okay, whatever.
That'll be our next
pipes.
podcast.
Yeah.
Killing.
Okay, so that is some of my first home buying advice. Some things to consider. Cameron, you're looking at buying a home maybe in the future. Any questions, or Tim, any additional advice?
I
Also,
feel
one
like I
thing-
want to build my own home.
Okay, there are things to consider. I don't know them quite as well, but I can mention a couple things. Tim, before I do that.
Oh, well, no, go ahead and do that, and then I'll send off on my last thing.
Okay, so building a home. I've had a few friends that do that. Are you talking like a custom home, or like, so right now I know in Utah there's a bunch of like subdivisions that are building a home, and you can go in and buy a floor plan, and then they build that. Is that what you're talking about, Cameron?
Not so much the floor plan, because me and my wife have more of a vision of what we would like to
Okay.
have.
Sure.
Like a double basement that's sloped in one area, or a double basement in one area that's sloped, so we could have like a movie theater room, stuff like that.
Sure. That would be awesome. And I say go for it if you can do it. My wife Debbie and I have talked about it before. We obviously have not done it, and at this point, unless something changes, we won't. But I know that in Utah, I don't think it's quite as bad. I know in California, building your own home is like a headache upon a headache upon a headache. Like I've had a friend that I used to go running with, that he's a real estate agent. So he's in the space, and he said, look, I know people that buy land trying to build a home, and he said 2 years later they might be nearing completion, best case scenario, and with additional costs all over the place. Like I said, I think it's easier in places like California. I know it's easier in places like Texas, from what I've heard. Sorry, did I say easier in California? It's either in Utah and. But there are a lot of things to consider. You have to pay for plans. You have to pay for. There's a lot of things that add up quickly as far as to additional home costs. So, if it's you guys' dream and you can do it, I say go for it. I think it's awesome. But certainly things to consider as far as what new construction also comes, even if it's your own custom plans. These people are still trying to make profit, and so sometimes they'll cut some corners, and you'll get some bad plumbing, and then you have to deal with that as soon as you move in, or just issues like that. Where if the home's been there for 10 years, those things have already been ironed out. So
I know bad plumbing. One of the toilets in my hotel has hot water plumbed to it. None of us can
Nice.
figure it out.
So is that where that room takes a bath in the toilet?
No, but occasionally we get guests that call down and complain. They're like, there's hot water in the toilet.
How would they know that?
Well, sometimes you flush the toilet when you're sitting on it and it will splash on you.
Well, that's what they want you to
Or-
think. I mean, what kind of
Or when things
Yes.
enter the toilet, sometimes there's splash that comes back. So
All right, yeah.
I'm suspicious.
Okay. All right. Tim, before we move on to vacation homes and second homes, briefly.
Yeah, and just I've read some people writing on this topic and questioning the received wisdom of the path to happiness and stability is through through owning your own home, and so I just thought I'd mention that while our underlying assumption here is you should buy a home, there are other ways. There's more than one way to skin a rat. We'll save her. But anyways, so for example, you might consider the fact that while a home can be considered an investment where you hope to get a return on your money, that's not necessarily always been the case historically. And you can look at the many people who have bought at at peaks of the home market cycle who have not seen a return on their investment. And I would even wonder if people buying right now should not expect to see a lot of return on their investment. You just have to wonder how much higher the market
Sure.
can go from, and no one can predict. It could go higher, but you just don't want to necessarily look at your home. If you're buying a home because you want to see your investment increase, and that's the only reason, then you probably want to question whether you should be buying a home. In my mind, good reasons to buy a home would be, aside from putting your money in a relatively safe place, lifestyle value. So I'll use myself as an example. I knew that I wanted to, have a stable location. And, it's a place where my kids can go play in the yard a bit and, and have space to play inside and so forth. And so that has value to me, independent of whether my home is returning a profit to me money wise. so if I didn't have that in the calculus, it might be wiser for me to put my money in long-term investments.
Yeah.
Which, oh, sorry.
Sorry, one other consideration, you can continue to say, but the other thing that your mortgage interest is a tax write-off.
Oh, nice.
So something to be considered.
And,
So,
and
Tim,
oh, sorry, Cameron, go for it.
I was going to say, so you're saying either, find some of the perks about your house, or you should have invested in GameStop. Is that basically what you're saying?
I really regret not buying GameStop like a week ago. I should have sold my house, sunk it all in GameStop, and
yeah. Right.
Yeah, over this month, it's had what, 1,000% increase, something like
insane. I think it's more than that.
Yeah. But so to finish my thought, basically, just and this is especially true if you live in a high property value environment. If I'm living in the New York, if I have a job in the New York City urban area, I'm probably going to look at not buying a house, but instead renting. If I have a job in, say, rural New Mexico, then maybe it's a lot easier to get a hold of a home. So just don't get locked into the mindset of I have to have a house to be happy. Look at your situation, and if it works, then there's the right way to go about it. If it's not, there's lots of ways to do things.
Yeah, a big obviously a carrot at the end of the stick. I don't know if that's the right analogy. Anyway, a good a motivating reason to buy a home beyond just, because in the near term, it might not be a good investment. If you stay in it a long time, like Tim said, stability wise, 30 years from now, if you get a 30-year mortgage, you no longer have a payment, at least not, you still have your property tax and your homeowner's insurance, but that's it, right? You won't have
HOA fees, another one.
Right. So that's
instead of paying, a couple $1,000s every month,
right,
you pay maybe $4,000 over the course of the year.
Right. Exactly. Yep. Exactly.
Yeah.
So that would be a reason to purchase a home, and they are, like Tim said, it's hard to know for sure if you're going to appreciate. Generally, over time, homes appreciate, but you're right. If you buy it in a bubble, you lose your job, you lose the house. Then obviously that turned out to be a bad investment, though you didn't know it at the time. So just got to be prudent and make
sorry to add one more thing, and not to be too alarmist, but you do hear pundits now, musing about the fact that a whole bunch of baby boomers, properties in the next 20 to 30 years will be, going up for sale or whatever. And so, you can't predict what's going to happen in the future, but you wonder, will that be a downward pressure on price and property value or not? Who knows?
Yeah, and there are a lot of different trends you can look at. This is the multivariate calculus thing, right? So if you live in Southern California, are people moving out? Or are they moving in? Is that if it's a moving out trend, is it short? Do people generally like to live where it's good weather? Yes. Do people like to live where there's high taxes? No. So, different things to consider. And so, just like I said, it's a multivariate calculus. You sit down, take some time to figure out what your algorithm, what your formula looks like, so that you can solve your home purchasing problem. So you can optimize that for yourself. So, okay, let's move on real quick here to vacation home and or a second home and a rental home. These are things I found out relatively recently. So about, 2 weeks ago, something piqued my interest. I've been interested in rental properties for a while. The idea of renting or buying a home and renting it out and making money off of that, ideally that the home that you own is appreciating in value, and while you're also making money off of it by renting it out. There's a lot of things to consider there, and we'll talk about it in a minute. But that's something that obviously I'm familiar with, and I've heard people do it, and it's seemed to turn out well frequently, not all the time, but frequently. So, but that's, you need 20% down. You need to know the area. There's property management costs involved. There's maintenance costs. There's a lot of, so you need to have some money on hand, and then also just know that you're going to be comfortable enough that come what may, you're going to be able to handle it and weather a storm if a year or two things aren't going well, that in the next year, 5 years after that, maybe you make a good return on your investment. But it's not exactly where my place is in my life right now with my family and our finances, to be able to just chuck 20% at a home that that I know much about. And so instead, last a week and a half, 2 weeks ago, I found out that a vacation home, a second home, the rules about that have been updated, I think even recently, as far as taxes go. And those are different rules. So a rental home, you have to have 20% down in order for a bank to give you a mortgage to buy a rental home. Obviously, if you have cash, then why are you listening to us? Find a different podcast, all right? We're talking to people that need mortgages. But a vacation home or a second home is not viewed in the same light by banks and mortgage companies. Essentially, you can buy a vacation home for only 10% down. Now, you can't get like a normal FHA loan. It needs to be a conventional loan, which means you need to have that 10% down. But that's all you need. You don't need 20% down. For a rental property, the mortgage rate, the interest rate is higher. It's about, from what I've heard, anywhere between 0.5 and 3/4 points higher for that loan. So you're going to be paying more. Where a vacation home, the mortgage interest rate is approximately what it is for a first home. So at least close, maybe a 1/4 point higher, but not a huge amount higher. So the interest rate's lower. And there are some rules beyond those rules, as far as a second home has to be at least 50 miles. I believe it's 50 miles away from where you currently live. They don't want you buying a vacation home in the same city that you live in, because that's not actually a vacation home, and they'll know that. And often to get a vacation home purchase approved, a mortgage approved, they'll like to see that it has some type of vacation amenities. Either it's close to the water, or it's close to skiing. It's got something there that actually tells them that you're not just trying to pull the wool over their eyes and buy just an investment property with only 10% down. But if you can find something like that, then all of a sudden the requirements are significantly less than a rental home. Now, here are the other caveats, though. You can't rent it out, obviously. It's the whole year round. This is for mortgage purposes and for tax purposes, you can only rent it out half of the year. But you can rent it out half of the year. And if you rent it out half of the year and you're making money off of that, and enough either to cover or at least subsidize the other half of the year, maybe that's, and you like the idea of owning a second home, maybe that's something that you want to do. Now, there are, once again, mortgage, when you are getting a mortgage for a second home, they want to verify your income quite well, and they want to see some savings beyond just the down payment. So I've heard even as much as like 6 months worth of savings to make the payments on the home beyond just the closing costs. So you have to have some money, but if you're thinking about buying a second home, generally you've got some money. And so the upsides are that you can count some of the mortgage interest can count towards a tax deduction. Like I said, you can rent it out, so you can Airbnb it on the weekends and make some money. And then the only requirement as far as it being a second home is you have to be at that home personally, or personal days for, I believe it's 15 days a year. Now, the nice thing about that personal use days is it actually doesn't have to be you personally. It just has to be either someone like a family or a friend, or anyone that you do not charge a market rate for to use your home. So it's pretty flexible, actually. So if you get that home, you rent it out, and then it turns out that year you can't go. If you can get a friend or even someone in the neighborhood, just be like, hey, good, could you crash at my house for a couple weeks for free? Then you've satisfied that requirement. Something also I learned when doing this research is that vacation. So I've wanted this before as well, as far as like, okay, I get a mortgage for my home. I'm there for a few years. I'm now going to move out of state, but I want to use this home as a rental property or something like that. Can I just flip this into a rental property without changing the mortgage because I bought it as a first-time home buyer or my first home, and so my interest rate's lower, but I'm not going to be using it that way anymore. My understanding, and this is me giving the caveat of do some more research if you want to be 100% certain before going out and doing this. My understanding is that as long as you've used that home for at least a year for the purpose for which you purchased it, the bank has nothing to say. The bank can't take any mortgage fraud action against you or anything like that, as long as it was used for the purpose that you bought it for at least a year. Then you can do whatever you want with it. So let's say you buy a vacation home, you spend 2-3 weeks in it 1 year, and then you're like, actually that's not going to work out, and then you just rent it out year round going forward. Apparently, from what I've heard, that's not mortgage fraud, and the bank will have nothing to say about it. Now, that does change your tax status. All of a sudden, the tax laws about it are different, but it's a way to potentially get in a home. And if you're buying a vacation home, generally, you want to be able to vacation there. But if it's something to consider as far as being able to afford a second home. So let's see. The other things about a rental home to consider, and even a vacation home, you're going to have property management. Even for a vacation home, you're going to need someone to take care of it when you're not there, and then just maintenance. And then, if you're trying to rent out a home, or if it's a vacation home, you're trying to Airbnb it, ask yourself who goes to this location and how often. What are the occupancy rates in this area for Airbnbs or rentals? How often do people rent out homes in this area, and what how much would I be making enough to cover the costs? So this is not usually most people's scenario. Most people don't own two homes, but if you're looking into it as an investment strategy, it can work. Just know that you need more than what you think you need in order to fund that, and it can be a headache if you don't just go in knowing I'm going to get property management to take care of this for me, so I don't have to think about it that much. It'll still be a concern, but one that you don't have to deal with on a daily basis. So, Tim or Cameron, thoughts about that before we wrap up?
Well, my experience with my vacation homes in Hawaii and Colorado has been that
they pay you a lot as a teacher, don't they?
well, it's my side business of selling extra credit points to junior high school students. So.
Wait, are you teaching junior high in like some Beverly Hills neighborhood or something?
It's online teaching. Yeah, it's all over. I just give them my PayPal, and there you go.
Right. They pay you in IOUs.
Yeah, that's right. No, yeah. So seriously, yeah, nothing to add. I have no experience in this regard. Maybe someday when I sell my movie rights.
Cameron?
I was going to say, if you want to get on a vacation rental and want to spend a nice, relaxing or fun weekend in Vegas, you can find yourself a nice way to really discount your trip by doing some stuff like that.
That's true. Yeah, those are also tax write-offs. If you own a property in a location, then you can get a tax write-off. It's at least once, maybe twice a year, going to check in on that property. So yeah, if you go to Vegas or LA once a year or twice a year, and you can buy a vacation home or rental property there, then your trip there is all of a sudden a tax write-off as long as you visit your property for a split second to check in.
That is exactly what I was saying. I meant a lot of the vacation rental places will give you like a free night and stuff for you to come and listen to their lecture on how you should give them money.
Oh, those are like timeshare stuff, right?
Same thing.
Well, they're different slightly, but yeah. Anyway, I don't know much about that, so
I'm just saying, it's basically the same thing. You put some money in, you can spend a week or two there, you get a share of the profits.
Yeah, Yeah, I mean, there's some similar ideas there. I mean, you don't own a property, you don't have the mortgage per se, but yeah, I mean, there might be some similarities there. Yeah. Um,
A lot of nice hotels and resort areas also do the same thing. You can buy
Right.
into
Right.
buy a room and then sell it. And
Yep. Yeah, and I've made use of that as a consumer before. Actually, my wife and I went to Cancun here a few years ago, and we purchased from a guy that had some type of this membership somewhere, and he was just essentially flipping it and turning it into a rental, and worked for us. It was slightly cheaper than we could get anywhere else, and he got some type of profit off of it, and so win-win.
win-win.
One other thing before we finish up here, mortgage payments, and this is something I was going to mention earlier, and this holds across obviously all these different first home, vacation home, rental home. Right now, at the interest rate that we're at, 2.5, or even where I was a few years ago, 3.5, that's your interest rate, right? And so if you want to pay off your property quicker, so that you're working again, that's interest rate working against you. It's at 3.5%. So you're paying off quicker so that you don't have that interest rate working against you. However, the flip side of that is if you take that money that you're going to throw into your house to pay it off quicker and invest it or do something else that has a return of greater than 3.5%, all of a sudden, as far as investment goes, the investment's going to give you a better return than actually sinking money to pay your house off quicker. Now, there are some upsides to paying off your house quicker still, though, as far as just that mortgage, the bank is never going to say, actually this month only 1%, please. We're only going to take 1%. Whereas a normal investment, you have no particular guarantee that you're going to get a return on that, but the mortgage is guaranteed that they're going to get their investment on you. And so as far as just certainty that you're going to get a 3.5% return, but now it's only 2.5%, right? So that's barely above inflation. You can probably find a better investment somewhere to put your money in. So it is probably worthwhile to put your money elsewhere. But Tim?
Oh, I was going to say, yeah, and there is, it's hard to fight that argument. The only other reason I can really think of why, yeah, it's a good idea to pay off your house sooner is discretionary, not discretionary income, but liquid funds. Your investments are illiquid, and so you can't do anything with them. You can't use them to, if you use them to say, buy a car or pay for education or other things, they're no longer investments. And anyways, a lot of them, like if it's a Roth IRA, you're going to incur a fee if you try to pull them out. So anyways, that's one of the reasons why I'm paying off my house faster than the minimum is. I know that once I do, I'll be able to, with my family, I'll be able to better fund, expenses of schooling, education, and, other things too. We'll take them on a vacation. We'll have that option because, we don't have all of my income locked up in a monthly payment on the house. So,
right. Yeah, I'm never going to tell anyone not to pay off a loan early. I do think it is worth considering it, though, as far as, when we refinanced, I was thinking, okay, we refinanced at a rate that if we continued paying the exact same mortgage payment that we'd been making before my refinance, we would actually pay off the new refinance 30-year mortgage sooner than if we didn't. If we just went with a new payment, if that makes sense. Anyway, that if we didn't refinance, whatever. That was very confusing. Essentially, I was saying that we were going to pay off the home quicker with the same payment with the new refinance loan. Then I talked to my brother-in-law. He's like, well, you could go for it if you want. But he said you could also just have that money to use for your family and or invest, and then only put money towards your house when that suits you, as opposed to trying to make sure that every month you make an extra payment or whatever. And so I've opted into to invest money sometimes in the stock market and things like that, which so far has given me a good return, though we'll see if that holds in the next few months. So
probably best bottom line is diversify.
Yep.
Pay extra on your home loan. Don't get crazy on it. Save some of that money and put it in investments that diversify your portfolio.
Bless you.
Yeah.
Yeah. Okay. Well, this has been a long podcast, but it's a good one. Hopefully, people found this useful. And thank you, Tim and Cameron. And we will wrap it up here. Please join us again next time.